Hello everyone, today is Tuesday, July 14th, 2020. My name is Evan and welcome back to another midweek market recap video. So we're going to jump right into our market technicals dashboard. You can see we had a strong rebound here on Tuesday. Yesterday markets had a pretty notable outside green to red reversal session. And here on Tuesday, we got no follow through. We in fact just bounced back and recovered lots of yesterday's losses. So all of the major indices were up anywhere from 0.5%, the Qs, all the way up to 2% for the Dow Jones. The 5-day change numbers all still firmly positive here for the markets. Russell 2000 lagging just a little bit. We are above the key simple moving averages in everything except for the 200 SMA in the Russell 2000. If we scroll down a little bit, take a look at sectors here. 5-day performance, financials at the top of the list. We talked about financials on Friday's weekly recap video, and they did kick off earnings today. We'll look at those a little bit later, but financials in the top of the list, followed by utilities and staples. And then on the downside, we have real estate, we have biotech, we have energy underperforming, and only real estate is negative here over the past 5 trading sessions. In terms of major markets, silver is at the top of the list here, 5.58%. Number 2 here is S&P 500. Number 3 is the world ex-US. AQQX there, number 3. On the downside, natural gas, 10-year bonds, and the volatility index VIX, which is still actually holding green here. There's lots of green on this. In fact, not much red we're seeing here over the past 5 trading sessions. That goes for all of our major markets as well, or major assets. It's pretty rare to see only one thing in the red here. So notice the real kind of distinction I'm making here is equity markets up, and so is VIX over the past 5 trading sessions, holding positive along with bonds. So it's a very unique environment that we find ourselves in right now. Let's jump into the charts here. With our equity grid going on here, we have our smart trend filters applied, which are the colored dots here. That is a custom in-house indicator of ours. And then we have the white dashed line is price itself. And we're looking at a weekly time frame right now. And basically, there's nothing that's changed here on this weekly view. We still have bullish trends in all of the equity assets here that we're looking at. S&P, NASDAQ, Russell, and AQQX, all bullish trend, prices above all of it, and we are mostly positive here except for the NASDAQ on the week. You can see we're down right now about 1.84%, lagging a little bit for the first time. We'll talk about that in just a moment. Now, if we go down to a daily chart, things get, again, a little more granular here. You can see we have mostly positive trends. We got 3 out of 4 of these markets in positive trend. It's the Russell 2000 in the bottom left, which is still yellow and in transition mode. It's been in this very much a chop fest here for the past several weeks now, and that hasn't changed. The Russell saw a strong session today, so we're going to need it to get back above, this 143 to start clearing over 143 to continue this trend to the upside, and we'll see if that happens. Right now, you can see it is the weakest of the bunch on a relative basis. All the other markets here in bullish trend as well, so there's no change here. And if we look in the bottom right, in fact, AQQX looks pretty primed here as it's near to it's nearly back to those early June highs, and it looks like the world minus the US here is starting to play some more catch up in terms of relative strength or relative outperformance. So let's jump into the price action view here. Let's look at some candlestick charts with the S&P 500. We'll go down to the view that we've been looking at and spending most of our time on, and it's this view right here. And we have the same levels that we've had drawn here for quite some time, and they are still quite meaningful because the market is paying attention and respecting them, just as as a technician would hope they would. So if we zoom in here and we look at the most relevant sort of elephant in the room here, it's still this 3130 to 3140 area. And if you recall from last week's video, our basic takeaway for the S&P 500 was that the S&P 500 held exactly where it needed to. And then we're really referring to this 3130 to 3140 level. And in fact, we're almost, singling out Thursday's session of last week where we did briefly undercut it. We traded down to the lower 3100s on this session, but ultimately prices drove off of those lows. We held, and then Friday we continued higher. So the takeaway again was holding what was resistance and is now acting as support in the S&P 500. And yesterday's candle here, yesterday's session got certainly a lot of attention. Everyone was pointing out the outside reversals that were taking place last week and yesterday, and for good reason. It was notable on many accounts, and especially some of the individual stocks that have been really driving this market higher. And I'm looking at the NASDAQ and some of the big mega cap names. They suffered or saw even bigger declines and more extreme moves than just this picture is painting here. But be that as it may, and the outside reversal is significant, and I do think we take notice of it. The bottom line is given where we closed in the S&P 500, there was still virtually no technical damage yesterday done. And that really goes for a lot of other individual stocks. What I would equate yesterday to is certainly a day to take notice, and where the momentum, the froth really comes out of the sails of that bullshit, so to speak. And we basically hit a reset button on some of the real frothy momentum that we were seeing out there. But in terms of any meaningful technical damage or trend changes, it's basically zero to very minimal out there on anything material happening yesterday beyond that rug pull. Now, of course, and this is why it's important to take notice, is that reversals and pullbacks and corrections and bear markets, they all have to start somewhere. And of course, this could still be the start to something more meaningful. But at this time, we still don't have that evidence. Markets rebounded sharply today, again, holding where they needed to. So when I try and just look at this market as objectively and simple as I possibly can, I look here and say the S&P 500 is holding this price action level. I look at my trend filters and I see on a weekly time frame they're bullish. I see on a daily time frame they're bullish. So to me, the benefit of the doubt right now is still in the bulls' hands, the buyer's hands. Again, that doesn't mean my opinion can't change tomorrow. If we suddenly see a steep, volatility expansion, high volume move below 3130, then my opinion here will change. But until and if that happens, I think we just go with the evidence here, and that the bulls are still holding on to this market. Now, that's the S&P 500. If we take things over to the Russell, you kind of have the same situation. Again, we've talked about the Russell being the weakest of the three, and that continues to be very much true. The relevant level we're looking at here is about 145. I've got it drawn around 144.14, anywhere in this zone here. It's effectively taking out the highs from last Monday on the 6th of July. If we can start to take this out and start to move over 144, 145, then we're in business here for the Russell 2000, but it hasn't happened yet. We're further off of the highs of June. So right now, the Russell 2000 is still in that chop box, and basically, if we looked at our trend filters here, it's agreeing and essentially telegraphing the same sort of mixed signals here. So the Russell 2000 clearly needs some more time. Of course, financials make up a lot of the Russell 2000, and they have moved at least a little bit today and the past several days. So that is helping keep the Russell 2000 in line. Now, the NASDAQ 100 is where we saw the sharpest or steepest or loudest reversals yesterday, and this chart shows that as well. So if we look here at the Qs, you can see, in fact, we gapped up to start the session. We did probe higher further up over 270, and then we reversed everything, and we had a pretty ugly close down 2%, engulfing the past two trading sessions, Friday and Thursday's action, and closing near the lows. So again, absolutely took the momentum out of the bull sales there. But as we see today, and as we kind of zoom out here, it is still very much a bull trend here. The technicals are still all up and to the right, so we don't have yet meaningful sort of technical damage to speak of. Today we did reverse, of course, and did close green, so we did not get a follow-through session today. You can see lots of volume coming in these past 2 days. The MACD is still pretty healthy here for the NASDAQ 100 as well, so there's actually still some pretty good momentum up and supporting of this market as well. So the Qs here, let's pay attention to them as we kind of get through the week. Maybe it's rotation. Maybe we get rotation out of the Qs and into the Russell 2000 here. So it would be an interesting dynamic if we actually saw the Russell start to, clear over this 145 area and start to break out as the Qs kind of come back into the 250s or 240s and just reset a little bit. That'd be perfectly healthy behavior. Obviously, I'm not sure if that's the case, but it would be something we can at least pay attention to throughout the rest of this week. So that's sort of the landscape there. As it stands right now, we've got the Qs, which are seeing a bit of a little uptick in volatility and some reversals, and we're going to continue to monitor them as the week goes on. Of course, we do have earnings season now, which have kind of officially kicked off today, so we have that to look forward to as catalysts over the next couple of weeks. Now, if we go to some of our other markets here and screens, if we look in the bottom left here, we got VIX volatility as a sell signal on the weekly chart. If we go down to a daily chart of the VIX here, you can see it's more neutral and sideways. The VIX has been perking up recently, and that's one of the things we noted at the top of the video was over the past 5 days it was actually green while the market was mostly green. So you can see the VIX kind of just moving back to that magnet of a $30 level, and seeing some protection potentially getting picked up here as we get into earnings season. So VIX neutral on the daily, bearish on the weekly, and we'll see if that changes course throughout the rest of this week. Bottom right's TLT, and that's in a bullish trend here on the daily chart. If we go to commodities here, we can see gold, silver very much in strong uptrends. If we go down to a daily chart of them, you can see pretty much the same thing here. Both of those markets are in healthy kind of bull markets here, bull trends for gold and silver. Oil in the bottom left on the daily is trying to resume itself back to the upside. DBC commodities in the bottom right still got a bullish market, bullish trend there as well. So life looks pretty good on these screens when you get to other assets like gold and commodities and bonds. And if we finish off this video looking at the XLF, just because well, that's what started to report earnings this week. This chart should look familiar. We talked about this in our weekly recap. We noted effectively the hold of support here on Friday, the strong rally taking out the past 3 session highs on heavier volume and holding at a pretty important spot. Of course, XLF is the worst, second worst performing sector year to date. So it's not, it's not a rosy picture here for financials at all. They have been the laggard and really where bulls have been making the most headway. But in the short term, it does look like they want to at least bounce here or hold on to support for now. We'll see if that continues to last, but I think the relevant levels around 2260 or so, 2270. If we start taking out this cluster of lows here, fill this gap, then the financials are once again back to a troubled state. But that's not what we have right now. They're holding, and we'll see again if that can finish into the rest of this week. So that is it. Those are the notes I have for the midweek update. Again, double check your holdings as we move into earnings season. And thanks as always for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk to stay up to date with all of our latest updates. So that's it for me. Thanks so much. And we'll be back tomorrow with some swing trade ideas during the market session.